Good morning, traders. Today is Wednesday. Let's take a look at the key developments shaping the markets today, focusing on the US dollar index, WTI crude oil, spot gold, and dollar yen. So let's start with the US dollar index. The index dropped below 98 on Tuesday, touching a 3-year low at 97.71. This came as tensions between Iran and Israel appeared to ease after President Trump announced a ceasefire, calling the conflict the 12-day war. While Iran's retaliatory missile strike on a US base in Qatar caused no casualties, Tehran's restraint and its decision not to block the Strait of Hormuz helped calm inflation fears, prompting a reassessment of the Fed's rate path. And Fed Governor Michelle Bowman indicated she may support a rate cut in July if inflation remains soft, echoing dovish remarks from Governor Waller. And markets are now pricing in 55 basis points of cuts by year end. An attention shift to Jerome Powell's semi-annual testimony to Congress this week for further policy clues. And technically, the dollar index remains under pressure, struggling below the 14-day SMA at 98.61. And momentum indicators are weak, with the RSI at 39.6. A break below 98 could expose further downside to 97.61 and 97.22. So moving to WTI crude oil, the oil extended its slide, falling over 4% to around 63.7 per barrel after plunging at 7.5% the previous session. And President Trump's announcement of a ceasefire between Israel and Iran helped unwind the war premium that had driven oil to 76.74 just days ago. The ceasefire, set to begin within 24 hours, eased fears of supply disruptions through the Strait of Hormuz, through which 20% of the world's oil flows. Although Iran's earlier missile attack on US military bases in Qatar was intercepted without casualties, the geopolitical overhang remains, and traders are watching for any signs of renewed tensions, but for now, risk sentiment is stabilizing. And technically, oil has broken below key support levels and may retest the $63 zone, with $60 and 59.4 as deeper targets if bearish pressure persists. Now, let's talk about gold. Gold prices leaped to 33.25 on Tuesday, hitting a 2-week low as markets' attention turned to the durability of the Middle East ceasefire. And although the risk premium eased, doubts linger about the conflict's resolution, especially after new missiles reports surfaced. These concerns, however, were not enough to push gold back to its recent high near 3,500. And on the macro front, dovish comments from FOMC members and signs of softening inflation continue to underpin longer-term support for gold. But still, a near-term pressure is visible. The RSI has retreated to its neutral zone and prices are hovering just above the 50-day SMA near 33.23. If that level breaks, 3300 becomes the next critical support. And on the upside, 3360 and 3400 remains the key resistance levels. And finally, the dollar yen. The Japanese yen rebounded to 144.6 against dollar on Tuesday, recovering from multi-week lows as the greenback weakened post-ceasefire announcement. And markets shrugged off Iran's retaliatory strikes after that caused no damage and noted Tehran's decision to avoid targeting the Strait of Hormuz. These developments, combined with reduced safe haven flows into the dollar, helped to lift the yen. And domestically, Japan's economy showed signs of resilience, with manufacturing expanding in June for the first time in over a year. The Bank of Japan kept rates unchanged last week, but hinted at further hikes if wage inflation persists. And on the charts, dollar yen faced support near 144.86 and resistance at 146. A sustained break of either side could dictate near-term direction. So to wrap up, a temporary de-escalation in the Middle East has helped calm markets and eased inflation fears. With the Fed's next move still uncertain, Powell's testimony this week could shift sentiment once again. And meanwhile, oil remains volatile and gold is solidating, and the Japanese yen is staking a cautious recovery. So thank you for tuning in and have a great trading day.